Hello, everyone. I welcome all of you to this exclusive fireside chat organized by the Economic Times, ETBFSI, in association with knowledge partner Backbase, a global fintech player. Now, my name is Mukbil Amar. I'm the executive editor at the Economic Times, ETCIO. First of all, I wish and hope that all of you are safe and secure. Now, coming to the topic for today's discussion, it is focused on understanding the digital journey taking place in the world of banking and finance. Now, let me add some context to this discussion. The banking industry has undergone momentous transformation in recent years as connected technologies unlock new financial and non-financial opportunities, particularly during the pandemic times, which presented unprecedented circumstances. Now, the new normal demands providing seamless digital services and personalized experiences. Customers are, moreover, increasingly expecting a superior experience across their journey from digital interfaces, products, and services, as well as personalized digital encounters, resulting in changed expectations from their banking services as well. Now, this has necessitated a rethink for existing banking players as they shift to meet the growing digital needs and expectations of customers. And this often requires front to back end digital transformation. Now, during this discussion, we will discuss the opportunities and challenges associated, the scope of a tie-up with ecosystem players, customer journey, user experience, building trust in a digital environment, impetus on a strong risk and security framework. These will be some of the key points which we will be discussing during the interaction. And there couldn't have been a better time to discuss all this because for today's discussions, we have a lineup of very knowledgeable and insightful speakers. I would take this opportunity to introduce our guest speakers. It is my pleasure to introduce Murli Vaidyanathan, Senior President and Country Head, Equitas Small Finance Bank, and Vidhi Datta, Head ASEAN and India at Backbase. Welcome to the show, gentlemen. Hi, Murli.
Good evening. Thanks. That was a very nice introduction.
Thank you. Thank you. Most welcome. So, really coming to the discussion straight away and deep diving into it. Now, what are the key priorities for banking and financial enterprises today in the new normal? And, what key learnings did you really have from this journey, particularly as you faced the pandemic circumstances?
Thank you. That's a very insightful and a very, I can say, a subject by itself, which we can go through. I would like to just go back in time and come back to the present so that we travel, we do some time travel. If we go back in history, banks is not bank, rather, was created with a simple purpose of collecting deposits from one end and actually giving it to the needy, and you make a spread. That was a simplistic mode in which it was operating, which means few will give money to some, that some will distribute it to many, and they get back. And that's how that entire cycle was working. And this was working from the ancient time. If you go back BC, AD, this was there always, this activity of mobilization. Then what happened, the entire thing where we were dependent on cattle and horses for mobilization of, productivity, the first revolution happened, which I keep saying, mechanization of workforce. During mechanization workforce, what happened was the demand to replace the cattle with machines was the first demand. So the requirement of money or the mobilization of money that needs to be moved up, and the number of people who are consuming became from few to many. As it was happening, second phase of industrialization happened, which is mass production, which means few will become a market player and few will start peripheral supply to the manufacturer. So what happened was the demand of money became scattered, which means there was a guy who is producing, he is also dependent on raw material producer, semi-manufacturing or semi-raw material producer. So the expansion of industrialization actually expanded the market of credit. So what happened? Banks started reaching more and more places, which means they started getting it from cities to town to semi-urban location to mobilize money to distribute. Then the third phase happened. That's a very interesting phase where we call it as automation, where actually automatic manufacturing things started happening. And that was the time where slowly service industries start picking up. It can be hotels, hospitals, the requirement for people to travel, the requirement for industries to have a scattered network because they can maintain the quality and consistency by sitting at the corner. So this created a next level of need, which is called, slowly geographies started expanding. Europe became one, Western market became one. And that was the time global trade started happening, which means it became a market for the entire universe of the world. The fourth stage, which is called, which I say after automation, was how do you control your back-end operations, which means till that point of time, automation was at the back end. Then slowly that automation moved to the mid-office level. And that was the first digitization that started happening, I can say late in 1980s or late in 1970s. For example, ATM, plastic credit card, if you go back and see, slowly things started moving into the direction called digitization. So then it expanded into the next level as the digitization itself has unveiled into three phases, 1, 2, and 3. From mid-office, slowly it started entering into the stage of front office. So where it can replace in the front office was the bigger question. So that was a time where most of the transactions, payments started getting into shape. Regulatory bodies have started accepting digitized point of contact, digitized proof of entities, digitized proof of individuals as an accepted documents. That's one of the biggest tipping point which started happening, say, from 2010, 2011. And while this was happening, very important transformation was happening on either side. From a web-based model, slowly the industry was operating and getting into the mobile-based model. And in mobile-based model, slowly it started moving towards the smartphone. So the entire journey suddenly is confined into the pocket. That's called now a mobile phone technology, which means a bank needs to be into the pocket, not only in terms of product, not only in terms of process, not only in terms of experience, not only in terms of solution, it needs to be a comprehensive stack. So the priorities at this point of time, how do I penetrate into every phone? If you go back 20 years back, how do I penetrate into every house was the need. 10 years back, how do I penetrate every individual was the need. Today, if I have 3 phones, the competition has come to an extent. How do I penetrate into all the 3 phones? That's the reality. You don't know which phone will I use. So which means entering into the closest space, giving the transactional convenience, fighting with all the available opportunities which consumer have, whether to save, whether to spend, whether to invest, or just blow out money on some, everything is available on the mobile phone. So which means, how do I increasingly me getting digitized in terms of service, digitized in terms of experience, digitized in terms of product, digitized in terms of process. So earlier banking or a financial industry used to be from regulatory to customer. Now, thanks to mobile, from customer to regulatory, it has become a reverse osmosis, which means I keep customer at the front. What all should I do to take care of him? And also I comply. Earlier, whatever I comply, I used to distribute. So the entire psyche, entire mindset, and parallelly, you have still in banking, multiple set of banks, one which is fully, I can say that into mechanization, one which is into mass, one which is totally into automated, and fourth leg of banks, which is digital. So how do I mix all these 4 into a proportion where people mix, product mix, digital mix, lead to a convenience? And this has already started happening. When banks overlooked payments and transaction space, third party came in and swallowed the market. So in front of us, while it is a very good digital revolution to happen to the consumer space, it can happen to entire range of products. So fintechs are nimble, banks has to get agile, and combination of agile plus nimbleness, which we call it as a collaboration in today's world, is going to create a complex data point. So which means digitization's next extension will become a data warehouse or a data lake, whatever we want to call. But the criticality is, how do I use data to action? Till 5 years back, data to information was seen as a bigger success, which means if I have your name, if I know your address, and if I know your whereabouts, it's okay. It's seen as fantastic achievement. Today, how do I propel data to action is the next level, which means it's putting into AI and ML a new algorithm-based approach, new machine learning-based centric. How do I process you through NLP? How do I create a robotic automatic process so that I can handle? And all these things needs to happen in seconds. So it's a very exciting journey ahead. What we have achieved till now, we might trespass it in next 2 years. That's the journey that's going to be all out. So it's a sum of digitization, which phase is over. Now data into action, second phase. How do I put UI and UX, that is user experience and user interface, as simple and do it yourself will start propelling more and more. And how do I crash the timelines without losing my eyesight on risk or compliance? So this is the journey. And in this, as I said, the priority is first get all your digitized, products digitized, process digitized, and transaction digitized. Make all your branches a digital experience center. Then move towards having your data and available data in the market and comply to all the norms so that you can start putting data into action. And third phase is absolutely critical. After putting into action, what happens? Because today the cycle time to open account or lend has crashed from 3 days to 3 minutes. People are wondering after 3 minutes, what? Fourth minute, what should I do type? So this is the critical journey which we are talking about at this point of time.
Thank you, Murli, for your very elaborate and comprehensive response to this question, and during which you really took us to, you actually, this experience was like that of a time machine, where you took us back to how things have really evolved to the current stage of affairs. And during this journey, you very rightly pointed out how things have been changing, evolving, with touching on subjects like smartphones, internet, automation, data, RPA. I would say that you have summed up very well the discussion which we are having. Now, but really sticking on to you for the time being, Murli, you have talked about this, in a very bird's eye view kind of a thing. Now, I would really want to make the discussion more granular in the sense that, after the pandemic circumstances kicked in, and, most of the enterprises, and particularly in the BFSI space, were, really pushed hard to, step on the gas on this digital transformation journey. What have been your key learnings, from this really very, I would say, unprecedented circumstances and a turbulent journey?
That's again a self-learning, and it was an adventurous path. It's like I keep saying I joined Equitas on Jan 2020, and March was a lockdown. So my wife asked me, "You had a stable job. What happened to all your plans?" And I came with a plan. So the entire plan was put onto the back burner. Then suddenly we have to reinvent and rediscover, not at my level, at an institution level. So which means what we were doing is good, and what we want to do has to be better than that, without losing productivity, without losing customer relationship, and most importantly, every brand stands for a brand promise. How do I do all these three without any confusion or overlap? So first thing we decided was, yes, the remote work ambience is going to be real for some point of time, and let us create a B2C product. That's called, how will I leverage my digital platform to take a product to the consumer where he finds it easy. With the click of the button, he is able to at least open the account. Then I can engage my relationship management team. So we created a product and rolled out one for savings account and one immediately for protection in tie-up with the insurance company. We were the first to launch, in fact, COVID insurance with that partner. So as we are building up B2C, we created virtual RMs immediately, parallelly during the 40 days, so that at least voice over data is very, very critical, because that's the first level of trust we are building with the consumer. It's not you click, tick, and forget. We are there with you. So which means I made a massive infrastructure in such a way, every branch became a I can say business BPO unit type. I said that every house, every branch, we will have a backed up approach to whoever comes in through the digital mode. We will put a voice over data. So first is B2C, then we approach that situation to virtual RM. As we were doing it, we said that this is all tough times, and we simplified the what we call it as general schedule of charge. As I said, we'll remove it and then see there was no MMC. Let people come, which means you're technically converting your entire banking in playground into a platform. Let people come, touch and feel, let them consume any product they want. So create an array of products which are fully digitized. So all these things are happening within 45 days. We first did that. Then virtual RMs happened. Then we started increasing our marketing presence to drive what we want to convey. What we want to convey, we want to cater to the savers as a society. That was not a time where you can go and do a wealth advice, where we can do many complicated things. I said, let's do a simplest of the product. So the platform was created, and simplified products were put into place, and more focus was given to an entry level fellow, which means we categorize customer as mass affluent, HNI and HNI plus. So we played the first three: mass affluent and HNI. I said mass will come into the platform through digital, VRM will take care. Mass affluent will come in, personal banker will take care, which means I map them instantly based on geography and demography, so that relationship starts. HNI comes in through a program approach, which is called Elite, and fourth leg was NR. We started. So now to create this, we started getting into search engine optimization and social media campaign in a very aggressive way. And to promote that, we started taking brand ambassadors who are fitting for that profile. We started integrating ourselves with IPL more diligently, and we started selling our story. See, Equitas is a very unique story which you can't find anywhere else, where we actually cater to the most deserving set of society who are in need of credit. Just to give you some side, we have 2 million women. We are the largest in microfinance. We are the largest in that segment, and we give retail lab, which is meant for small mom and pop shop, market shop. So we started selling this story to the consumer, saying that your money, when you are putting it to us, one is you are getting a better return. That's one part of it. The most important part of it is it's deployed to the most deserving section, and we are able to collect it back. And that story, we started creating a library of success story of our consumers who actually sailed through COVID. So which means brand building was happening on trust. Brand building was happening on our ability to take care of deserving. And most importantly, we started positioning. We are the only organization in India where we plow back 5% of our profit into CSR. And this three clicked. So segmentation, product specification, digitization, relationship management, and using those branches as a relationship centers actually helped us to scale up. Now, next level, we are planning to create digital centers within the branch so that this continuous activity of digitization keep happening. And to keep these customers up the curve, as and when the lockdown kept unwinding, we started moving those customers from saver to investor. And to get that, we launched product on ASBA. We got into 3-in-1. Then we wanted to move them into spender community. So we ran a lot of spend campaign. So what started as a single S, that is save, we moved it into saver, into an investor into a spender. So the wholesome gamut of things was put into place, and everything we leveraged on digital as a mode end to end. And training those front end was the biggest challenge because they need to adapt from physical approach to digital approach. So canned talks, iterated views, and to give them the most important thing, we created something called propensity-based data analytics at the back end, so that they will know for this segment of customer, this is the talk. For this segment of customer, this is the talk. And as we are doing it, we started doing segment-specific products separate for NR. So it's a mix and match of multiple things. Luckily, I can say 7 out of 10 clicked. So a few things which clicked for us was product improvisation, digitization, revisiting prices, leveraging branches, using relationship as a tool, building brand, most importantly, sharing success stories. This 7, that's why we call ourselves as power of 7. And coincidentally, at certain threshold, you get 7% on our savings account too. I'm sure you should also try that here. Having heart sold what we
did. Suggestions well taken.
Thank you.
And I think that you have been, from your own description and explanation, it seems that the bank has been able to adapt very well to the changed circumstances and leverage digital to its maximum potential. Now, so it really does feel that digital has made life very easy. Not very easy, but really going smooth.
I just want to add a thought here. While we are doing the digitization, we categorized ourselves into 2 buckets. One is B2C, which means I have a product, I directly take it to the consumer, which we call it a selfie, where you get mass and mass affluent in based on geography, where branches are present. We also did an API and open banking tie-up with NeoX. We went to tied up with a few other fintech company for Grow to get their customers to bank with us. And NeoX has been a fantastic collaboration where we already closed 1 million account. Now, there it is B2B2C, where I give a API banking, open banking with certain rule engine, and they start running the campaign. Their customers come in, I onboard, I back it up with what we call it as a CLCM, customer lifecycle management. So this B2B2C as well as B2C both grew at the same pace is something very encouraging. Now, having done that post-COVID too, we also, because these customers who are coming in are half KYC, we need to make them into a full KYC customer. So we leveraged on technology to create video KYC centers where consumer can come in, full KYC through the physical thing. So it's a sum of small, many parts, gears actually helping us to move. And these things are possible if you only in a digital world. You can take a piece and take the entire gear management system, scaling up in a better way.
Right, right. So I think these were all steps that eventually took you to that goal of becoming really efficient and providing, products and services very seamlessly. Now, uh, really sticking on to you for the time being, Murli. So you have spoken about this, the fact that the organization was very quickly adapted itself to the changed circumstances. Were there any challenges that you faced during this journey of turbulence?
Of course. See, like they say, there was no better volatile, uncertain, chaotic situation than what we saw in last 2 years, which means every strategy needs to have not only A, B, C, up to D. By the time you realize it's failed, you need to have the second arrow up and running. So we were actually configuring ourselves in that sort of a missile mode. We will try this month technology. We will get the employee up. As they are coming up, we will tweak the general schedule of charges. As we are getting in, we will move into segmentation. We will get the back office ready for propensity. So it's a series of activity for 3 months. It was very well orchestrated. So one of the key challenges is getting your employee to believe that this can add value. Because we are used to some traditional methodology where I feel the personal sales satisfaction only if I meet you, greet you face to face, and then ask you for something. So we are not used to pull factor. So which means as a small brand, you're not having a great pull at that point of time. So you need to create the pull factor at a brand level, push factor from the HO to the front end so that they become a center point of activity who they can start selling value-added services more than the product. So you need to get the front end trained, and back end has to be very nimble fitted because we were used to a situation where accepted TAT was 24 hours and 48 hours. Suddenly in the digital world, it's coming into minutes or seconds. So getting the operational excellence at the back end, making the front end believe that this is going to be a pull, and to get the pull right, you have to talk this way, act this way, and this is how you have to sell value-added services and create a pull factor through brand. And most importantly, you have to make customer do it yourself mode. So that was the biggest last leg. So assume, why will someone in the height of pandemic will try to download an account or app and open an account, and then somebody is calling up for funding? This is one of the most trickiest. So what's the story you have to tell? What's the story you are telling? How are you going to tell this story, which is very real? So we went in that fashion. So this, of all the things, last leg of educating consumer, many people downloaded, then they were linked and they never knew what to do next. So now based on the click at the back end, who failed, the call was getting connected, somebody was doing it. So it's learning and development for the first 2 months, but it took off seamlessly and at a momentum which even I never thought. Just to give you some figures, this actually propelled our entire acquisition pace by 10x or 12x. Once they start doing it, then that's the opportunity.
Amazing. These are really amazing figures, because customer acquisition continues to be one of the biggest challenges that banking and financial institutions face. Now, really bringing in Riddhi into the discussions. Riddhi, you have seen Murli speak and touch on a diverse range of subjects. So your thoughts on it?
No, so I was not only just listening to him, I was also making notes, not just for today, but also for the future, because a lot of very good and pertinent points, Murli, that I was listening into. No, so Mukbil, my sense is this, and I will just go back to some of the points that Murli spoke about earlier in the first question that you asked him, right? One of the points that Murli was talking about is when automation kicked in and when the service industry kicked in, people's demands went up. So people needed to travel and they had more expectations. So that was one part. Now, what that highlights is that whether it's from a service industry or whether it is from a banking industry also, which is a part of it, people's needs are very simple, right? People's needs are not very extensive. So when somebody comes to a bank, very simple set of needs, I need to save my money, I need to grow my money, I need to invest my money. Or you as a bank, please tell me where should I invest this particular piece of fund that I have. So people are looking for simple advice. That is the first takeaway, and I'll try to tie all of them together into one particular piece. The second thing I think Murli also spoke about very well is that it is not just product, it is not just experience, it is not just the solution, it is not just the process, it is looking all of them together as one comprehensive stack. And the third thing, which again he alluded to, is about data. It's not just about having data, but how do you use that? It's more about actionable data. How do you use that data to drive action? Whether you use AI, whether you use ML, or whether you use simple event-based action to drive more interaction, drive more engagement, do more cross-sell or upsell. Now, what I am seeing, and this is not from the context of only Backbase, but what I have seen for long happening in the banking industry, specifically in the country in India, a lot of experimentation has been happening, like we know, right? I mean, experimentation and our regulators have also been supporting such experimentation. But with this experimentation, that point that Murli mentioned, one comprehensive stack, where you have the product offering, you have the experience, which is the UI and the UX, you have the process underlying, you have the solution, and you have the customer context at the center. Somewhere, I'm not talking about Equitas, but somewhere I have seen that philosophy of one comprehensive stack, one platform, one single layer getting missed out at times. And what has happened rather is that they're for this experimentation that has kept on happening, looking at multiple sources of data, analyzing data, rather than moving into more horizontal platforms, banks have unfortunately moved a lot into silos. And now today what is happening is, after a point of time, banks have realized, oh, I have a lot of things which is going well, but somewhere it is broken. Somewhere it is not connected, all of them together. And that is where I see a lot of banks now, after that experimentation phase has stabilized, are moving into, okay, now that I have all these different pieces which are all in these silos doing fantastically well, can I move them into one single platform? And one of the classic examples there is what Murli was talking about. If you look at things like NeoX, you are bringing in platformization, the concepts of platform there. You don't need to really bother about who is behind it. You just need that, as a consumer, I need this, and NeoX is providing me this. Correct. So I think that is where I see the industry moving into. Some institutions, some banks have already made the move. Unfortunately, there are some banks, probably larger names, who are still in that silo, and probably because they are larger, it becomes tougher for them to move out of it. I mean, Murli, you come from a larger institution as well, right? Yeah. So it might be just that much more tougher for larger institutions to move out of their silos compared to smaller, nimble, small finance banks who have less legacy, less debt, both from a process perspective as well as a technology perspective, right? So that is what I'm seeing, broadly from an industry perspective, Mukul. The other point, which I very quickly wanted to highlight again, and Murli was talking about B2C and then B2B2C, and then he finally tied it up to, you take the examples of NeoX and how your customer acquisition has grown up. I was looking at the selfie banking as well, and I was actually quite inching towards opening up an account, looking at that 7% interest rate, Murli, to be very frank.
Thank you.
And I might do that. Good news. I might do that in the time.
Keep scratching. Someday you will land up in it.
So that entire piece around customer acquisition, right? It is so much an important piece nowadays. If I go back 3 years back also, the discussion was around, hey, I need to offer my loans in a better manner. I need to offer my deposits or my cards in a better manner. Today, bankers are not talking about it. As Murli said, today bankers are talking about very, very few and important metrics. 1, what is my cost of a customer acquisition? 2, what is my drop-off rate? 3, how much X factor times have I been able to grow my customer acquisition through digital channels and non-digital channels? Very simple metrics. And if you start analyzing these metrics, you know where you need to do your investments. No rocket science. So I think this pandemic, this overall market situation for the last 24 months, for good or bad, has helped banks and bankers, both from a technology and from a business point of view, look at things in a very objective manner rather than keeping them subjective. And that is also now moving discussions also to that level where, rather than that siloed discussion that I was talking about earlier, banks are moving more towards, okay, can I consolidate all of that together, right? Into one place. A very classic example, I think Murli was again talking about other industries. And when he was talking, I was just thinking that, when did I last use the DTH box in my home? Probably 3 years back. With first Amazon came out with Fire TV, and then the smart TVs came, and the DTH went out of business. And that is the threat, right? That is the threat which every industry faces, that it's the threat of extinction. And that is where banks also need to continuously innovate to be top of the game. Otherwise, extinction is not far away. So that's just my point of view. But
very beautifully put, Riddhi. I mean, extinction is not far away. I mean, very profound statement coming from Riddhi. And I think this is not really true only for this segment or this sector. It is true all over the world that, disruptions, the way disruptions are coming, it's really impossible, actually impossible to really predict who will survive and how they will survive. But one thing remains sure, that innovation will play a major role. And I must thank you, Riddhi, for really, tying the entire thing into one piece, and in which you also touched upon some of the systemic challenges that enterprises in this space face. For example, the siloed approach, the lack of objectivity, and so on and so forth. Now, really sticking on to you, Riddhi, how does Backbase play a part in really sorting this out?
So I'll keep that very short. I don't want to make it a product pitch, but Backbase essentially is that sort of a platform or that layer that I was talking about, where we cannot claim that we can solve all your problems, and essentially it ends up being a larger ecosystem play. There are so many best-in-breed fintechs that are doing point solutions very well. So we are not trying to go into their space. We're not trying to compete with them, but we are trying to bring that one single unified platform, which will aggregate the data, as Murli was talking, from all these different, it could be internal systems, it could be external fintech solutions, but aggregate that data and then use that data intelligently to orchestrate the customer and the stakeholder engagement, right? It's a very simple example. You think about what we use today, let's say a Zomato or an Uber Eats. All stakeholders of Zomato, so when I'm ordering a food, I get to know where my food is. I know where the driver is. Today, I know whether the driver is vaccinated or not. I can see his vaccination certificate also on Zomato. And at the same time, if you go to the back office of Zomato, the Zomato internal folks can also see a lot of customer data. Now, why that is possible is because all stakeholders, the customer, the internal employees, the ecosystem, which is the drivers, the restaurants, the kitchens, they're all operating on one single platform. And that is what we are trying to do when it comes to banking. We are not trying to replace fintechs. We are trying to provide that one single unified layer, which will do that data aggregation and then do that experience orchestration on the front end. So we are, that is the vision that we are trying to bring forward, that it's not just about the mobile app. I think anybody can build a mobile app these days, right? Especially in a country like India, where we belong, we have so much of technology and capabilities. And it's about what is under that mobile app. It is about that process. It is about that orchestration. It is about how do you capture those customer journeys. It is about, let's say, if a customer is investing today in crypto, it's a very debated, a highly debated topic, but it invariably comes out. If a customer is investing in crypto, can the customer use your Equitas mobile app, for example, hypothetically, to do that trading journey as well, and not go into another different crypto? So it's about bringing that experience together, and that's where platforms like Backbase come into the picture.
Right, Riddhi, and you very beautifully touched on the crypto subject as well, which is so hot and so relevant today. Now, really going back to Murli. So, Murli, how do you really see this all translating in terms of business, and what are the kind of changes do you see happening in the SFB space, and do you think digital banking is a very, very definite possibility?
See, digital bank is evolving. An absolute digital bank at this point of time is non-existent in India. Like my friend Riddhi said, most of us created silos. Now all silos actually converge at a consumer level, and keeping a customer at center, the digital world needs to revolve. I think that stage is 1.5 years ahead. But having said that, millennials and Gen X have started adopting to fintech as a way of life, which means convenience and transaction ability. That is your tap. And most importantly, backed by a trust is going to be the TTC's trust, transaction and convenience is going to be the most critical thing. This is at a consumer level. But at an institution level, what is the ability to handle the at least volume and variety of data? Because the volume of data, all of a sudden, when I say I grew up by 10x, now the entire infrastructure needs to capable of dissecting into wanted data and unwanted data. That segregation has to happen fast. And seeing that variety, I should be in a position to go to the next level of customer lifecycle management. I think that ability is still a far stretch for the bank. So if digital bank has to gain the space of building value over a period of time, it needs to build in this: how do I handle the volume and how do I handle the variety? So which means the architecture of the bank and the infrastructure of the banks needs to undergo significant. So how fast you can move into cloud, how fast you can get into your AML, how fast can you decipher a data and say that moment you open an account, it triggers multiple inputs to the front end. So it's going to be a complicated journey. So which means very few months from now, I feel digitization phase would have got over. Now data monetization and data realization phase will kickstart. And this is going to be a huge opportunity, which means not only, and now RBI, they really come out with a digital currency in a year. Let's hypothetically for a situation, say S, then it's going to transform this entire journey into a new level, which means end to end, not only a product is digital, not only a transaction, not only his campaign, not only his consumption, his balance is also going to be digital. So entire D, which means D to D, data to digital currency is going to be a real thing. Now, how many institutions are forward looking? Because this will be backed by 5G too, which means once 5G comes in, as such, voice calls have taken a backseat. SMS is out of date. Now, after 5G, maybe this video calling also will vanish. It's going to be everything all, and it's picture on picture and data on picture. So it's going to be a complicated world. So institutions needs to get into those real hi-fi Hollywood movie types. And one good thing that has happened thanks to pandemic is all these things were seen as R&D expenses. Today, it is a definite need investment. So the concept of financial controllers and the organization towards being future ready is a parallel activity. How do I protect my customer? So getting future ready and all those things is an investment. Holding to the present consumer and doing without losing your present focus is going to be a present revenue stream, which is going to fund it. So there is always a dichotomy which every organization is going through. And in 2 years, it will have a clear space. So digital will rule over phygital over, say, 5 years.
Amazing points coming from you, Murali, and I really liked the way you painted the futuristic picture, and how you touched on various important and pertinent points like volumes and scales, and how speed will be critical to the survival of organizations. And in all this, I think data will be one element which will really decide, on how enterprises are able to adapt and adopt as we move forward. Now, we have seen excellent points coming from Murli. Going back to Riddhi. Riddhi, your thoughts on this. Where do you see the future of banking in India?
Future of banking is very broad for me to answer, but I would probably like to comment on the digital banks space. As you introduced me, Mukbil, earlier, I operate across the region, which is broader Asia as well. And as Murli might know, there has been a lot of activity in neighboring countries like Singapore, Philippines, and now Malaysia. And then Thailand has also, their regulator also announced a couple of weeks back, which is around this entire framework of digital banks, new set of banks, like what we had in India a few years back with the small finance banks coming up. Singapore, Malaysia, and these countries have launched new digital banks. And that has completely changed the laws of the game in those countries. The traditional banks they did not have an option but to sit up, react, because competition was coming. And competition came from where? Competition did not come from banks. Competition came from the likes of Grab, which was competition to Uber at one point of time in Southeast Asia. They bought out Uber, and then Grab went into full-fledged banking. So banks, the traditional banks, had to sit up and react to that new wave of competition, and they had to evolve. Now, what I have been personally monitoring and following very closely within India is when Niti Aayog came out with that entire paper on the framework, and they opened up for consultation around digital banks. And I think they have opened it up till the 31st of, they were open till 31st of January. And that is something I'm really looking at. Now, whether Niti Aayog and then RBI really goes into that phase of licensing new digital banks in India. Now, if that happens, that might not happen in the short term, not in the next 12 months, but if that happens in the next 24 months, that is going to be the next phase of, innovation in the banking industry for India. Because as I was saying, that will force a lot of banks who are not doing enough today to really do. I can quote one banker, very senior banker, telling me, and I was asking him, why are you doing this initiative? There was talking about a large digital initiative, and he said, it's a question for us to survive. If I don't do this, and going back to my point around extinction, he said, my bank will not survive in 5 years' time. And this was a banker outside India. So now if I relate it back to the same concept in India, if RBI comes out with new set of digital banks, which can operate without physical branches, which will be mobile only, with no debt technology process, that will be the next phase of innovation, because that is when you'll see the larger boys, people who have not done enough over the years, having to being forced to do things otherwise, where they will move towards that phase of, I wouldn't say extinction, but non-relevance over a period of time. So I think that is what I'm really looking forward to, very with close eyes over the next 12 to 24 months. What sort of policies and regulations come out of Niti Aayog as well as RBI around digital banks in India, and then obviously as that grows, I think the entire ecosystem of partnership between fintechs, banks, platform providers like us will continue to mature and stabilize over a period of time, because that is the way forward. Fintechs cannot compete with banks. Banks cannot compete with fintechs. It has to be a partnership model, and players like us somewhere come in between to sort of facilitate that. So that's my short take, Mugbir, in terms of
Right.
banking.
Totally agree with you. Couldn't agree more with you, Riddhi, on this, that to be in business today, you have to be in digital. It's no more a question of choice. It's a question of survival. And the fittest, the most digital, the most innovative of all of them are going to survive as we move forward. Friends, it's been a lovely discussion today. However, in the interest of time, we will really have to wrap this up. Thank you all for joining us today. Have a great day ahead.